Hi, everyone. My name is Jermaine from the Bay Street Oracle. Today, we're joined by Craig Gardner, President and Head of Canadian Corporate Banking at MUFG. Craig, thanks for joining us.
Thank you very much, Jermaine. Good to see you again.
Good to see you as well. I'm really happy to bring you here today and talk about your career, what you're up to at MUFG. And one thing that I wanted to start with, I think, just going through your early life, you studied history at Huron, now Western University. How did you get into finance?
Bit of luck, I would say. It was the late 80s, so everything was about Wall Street and the stock market. You had movies like Wall Street with characters like Bud Fox,
Yeah.
Gordon Gekko, and you had the book Liar's Poker by Michael Lewis come out. That generated a lot of buzz amongst people my age. So, the stock market was something I was always interested in, but knew nothing about. So it was a fluke. After my third year, I landed a summer job at Dominion Securities, which at the time was being acquired by RBC. It was in the options and commodities group, and I was clearing option and commodity trades, sort of a back office kind of role. I parlayed that summer job into a full-time job after fourth year. So I graduated with my history degree, honors history.
Yeah.
And, started working on Bay Street with Dominion Securities. Wasn't a great time. The markets were soft. As I said, RBC was doing its creeping takeover of Dominion Securities. So there were rounds of layoffs over the almost 3 years I was there. And each time they would come to me saying, Craig, you're the guy, or we have this role for you down the hall. So I had no control over my career. And I think the last area I ended up in was a very nascent but growing area called compliance. And I absolutely did not want to be in compliance. So I knew it was time to get my MBA.
Yeah.
And then through that is where I really began to learn about banking. And I sort of credit my father. So he was a small business owner. He had a couple of factories, sheet metal manufacturing, and he used to constantly complain about his banker. He was a TD banker. And how they would rotate every 2 years, and he'd have to go through the same song and dance about explaining the business, take them through the factories. They extracted their pound of flesh with, secured 6 ways till Sunday. And I remember from that conversation thinking that TD role sounded very interesting.
Mm-hmm.
So you get to work with entrepreneurs, understand their business. You have a very impactful product that's crucial to their business.
Yeah.
And you can watch them grow and succeed. And I thought that was really attractive. No file was going to be the same. No day would be the same. And so from there, I pursued RBC, and they had a relationship account management training program. And that's how I got into commercial banking.
Cool. And would you say within that role, like what type of transactions were you working on? What type of clients? Because commercial banking today, it's very wide variety. You see like transactions from 5 to 300 million.
Right.
What did it look like at that time?
I was at sort of the small end of commercial banking. So these were customers that would be hundreds of thousands in revenue to tens of millions. Maybe I think the largest customer I had at the time, I think was $20 million.
Yeah. Across
all sort of fields. I was doing pizza franchises, golf courses. There was a small tech company. It was sort of broadly diversified. The product set was pretty simplistic. A lot of it was equipment loans, government guaranteed, revolvers, term loans, and it was all about balance sheet deployment and also having the bank get their arms around these customers from a retail banking perspective. So, be it wealth management or be it, the actual branch deposits, et cetera, et cetera.
Okay. And I understand you obviously built on this background in commercial banking into the wholesale banking business, moving to SG.
Correct.
Prior to kind of touch on that, I just wanted to know if there's any mentors that helped you evolve from commercial to corporate banking during your time at RBC.
Yeah, that's a great question. And in hindsight, it was definitely a mistake I had made not getting a mentor. I definitely could have used the independent advice, their network, and judgment. in terms of building my career. I think I wasted a lot of time chasing, the odd shiny object, distracting from what I ultimately wanted to do and sort of what resonated with me. So yeah, I definitely feel that I missed out on that. It's something I should have done. And I would say for, people graduating from university, that's something you should definitely acquire is a mentor along the way.
For sure. And now making that jump to Soc Gen, obviously your first time at a global bank.
Yeah.
Your first time going from commercial to corporate, so clients' needs are more complex.
Yeah.
What were the challenges, opportunities like there?
Yeah, that was the complete other end of the spectrum from where I came from in commercial banking. So now I'm in corporate and investment banking. These are large cap, publicly traded companies. It is more intense or more technical would be the term on the credit side, credit analysis, sector analysis, understanding markets, understanding the products, FX or swap products alongside your customers. So it was definitely a learning curve, moving from commercial to corporate, and that was the biggest adjustment I would say at that time.
And I understand the bank at that time, they were very prominent, I think, in provincial and federal bonds. Like, what type of clients were you working with specifically, and what allowed them to be differentiated in Canada?
Yeah, so I was with the TMT group, which was the right group to be in 1997.
Yeah.
And so it was the boom of tech media and telecom. At that time, Rogers and Shaw, not only were they independent and competitors, but were non-investment grade. And there was even a time where there was a worry that Rogers Cable Systems was going to fail. They were just so leveraged. Newspapers was in vogue. We had Hollinger under Conrad Black and all the subsequent scandals that happened there. And then you had tech companies like Nortel, who we thought was never going to go anywhere and couldn't possibly fail. Though fast forward, 4+ years, I think we all saw the outcome of that bubble bursting.
Yeah. Okay. So it sounds like you definitely had your fair share of exciting moments, and then some.
Yeah, definitely. Well. And as a foreign bank, how there's a bit of the same struggles, say with MUFG today. It's not really a level playing field. It's clear that the Canadian banks dominate the industry, 80%, 90% market share. So you need to find your niche. So it was picking their spots. They were very good in areas that I had no, exposure to at the time. Project finance. I think we'd bought a team from Hambros, who joined, and were doing, I think, wind farms, which is, something I thought of as very European, that was suddenly being brought to Canada. And I think they were looking at some infrastructure at the time as well. We were able to use the global network, so less germane for TMT, but for our mining customers and our oil and gas customers. We have Center of Excellence in Houston doing reserve-based lending. On the mining side, a lot of the Canadian miners are looking at some pretty funky jurisdictions at the time where the bank was operating, be it in EMEA or Africa. So those were areas where we could help Canadian corporates.
Mm-hmm. And it sounds like a lot of good experience there. When did you decide it was more to go local, go back to RBC Capital Markets and join the syndicated leverage finance desk? Well,
being at a foreign bank, strategies can change in a hurry. So now it's late 1999 and the TMT bubble, which was the biggest driver of the business at the time at Soc Gen, is starting to burst.
Yeah.
So the bank was definitely peeling back capital in Canada, and I just did not want to be part of exiting relationships, because they ultimately did. So, I used that as an opportunity to parlay that into the syndications role at RBC, and it was through my experience at Soc Gen where I first came across syndicate desks and the people running those desks and the whole syndicated market. It was definitely intrigued by what that product, if you will, was offering.
Yeah, and in RBC, I think that's where you spent the bulk of your career. It's where you really made a name for yourself. How did that mandate change over time? How did you see the team evolve over the years?
Yeah, I like to say I had a front seat to the largest credit cycle in history. When you think about when I joined, rough, Fed funds rate or a BOC rate was, call it, anywhere from 4 to 5%. That went to effectively zero by 2010. And that corresponding time, you saw so much credit enter the system and leverage enter the banking system. So it was definitely an opportune time. So when I joined, when I think about all the things over the course of the 15 years that I saw, so I joined at the time of the tech bust or the TMT bust. Then I saw the rise and fall by 2006 of the income trust boom and bust. That effectively was the start of sort of LBO activities. So a lot of those income trusts converted into leveraged buyouts. Bell Canada, also on the eve that the finance minister shut down the income trust market on October 31st, 2006. Shortly thereafter, it was largely because of the Bell announcement converting to an income trust that they shortly thereafter entered into an LBO, I think with teachers and some other U.S. private equity. So I saw the rise of sort of LBO, the commodity boom and bust, and various boom and bust sort of along the way after that. So it was a great front seat to all that. Our mandate over that time had changed as well. What was sort of a sleepy business in 2000, providing CP backstop, became very much a corporate finance product. So a lot more structuring and financial engineering going behind boring old senior debt kind of thing. And with that rise of the credit cycle was definitely an exciting time. We originally reported into DCM. So from 2000 to 2004, we reported into debt capital markets. And the theory was sort of relative value analysis. So how do you price a loan? It should be priced alongside a bond. This was the thinking at the time. So there was a lot of mental gymnastics and extrapolation to take, okay, here's a 10-year floating rate bond over govies. How do you translate that to over LIBOR on a 5-year or a 3-year basis, and what should the pricing look like? It was a lot of gymnastics, and at its heart, lending is relationship management. It's a relationship business, and that's not always rational. So you can't apply a rational pricing model to something like syndicated loans. So it was kind of a failed experiment. So in 2004, we flipped into investment banking. That's when things really took off. That was sort of our home. We were situated right in the middle of coverage alongside all the investment banking partners and products and markets as well. So we were sort of like almost like a hub and spoke. I like to think of syndications as sort of the hub, of course.
Yeah.
And working closely with ECM, DCM, all the various markets kind of products, be it swap, FX, all those hedging type products. So we were working obviously very closely with the corporate banking RMs as well. So it was very much a coverage effort across many products and experts.
Yeah. And what does the deal origination process look like? Like, I understand a lot of banks, their offer being balance sheet bank is, providing that acquisition financing and an M&A scenario, or like, are you pitching clients creative financing solutions? What did that look like, and how did that change maybe over time?
Yeah, definitely. So we at RBC I like to think we were uniquely situated, as I said, sort of between corporate banking, investment banking, and then you had the halo of product and experts around you. So it was very much a true coverage effort. So as I said, we worked very closely with M&A, pitching ideas with them, financing solutions for them with the customers, ECM, DCM, as I mentioned. So it was very much a team effort. We were given a lot of latitude from a coverage perspective. So we were negotiating directly with borrowers, structuring, originating, distributing. In effect, we sort of took over the relationship management aspect for the period of time that the deal is in market and until closing. So you're very much the product expert, if you will, in front of the customer, and you're bringing all the market data, the comps, the pricing, all the structural enhancements, all the the bells and whistles that are happening in the market to provide a creative financing solution.
Yeah. And is there, I know RBC is very active in the space, and a lot of their M&A mandates come along with the acquisition financing. Is there like a marquee transaction that you were a part of?
There were many. So, there were, at the time, given I was largely responsible for oil and gas and then probably secondarily mining. This is during the commodities boom, and I was on for some of the largest acquisition financing seen in Canada and the largest syndicated financings placed. One that particularly stands out. Didn't really hold up to the test of time, but was Barrick's acquisition of Equinox in 2011. That was the largest syndicated financing at the time. I want to say it was about $7 billion in facilities, which in 2011 was a lot of money, kind of thing. I think there's definitely larger facilities today, and the market is a little deeper from a distribution perspective. It's also, it's the scars that I have from going through, say, the financial crisis, where you learn the most, and those are certainly memorable. You're always going to remember the very scars that you receive, right? So it was there where, theory, so those elements, those structural elements in your commitment papers or your credit agreement become reality. So it's market flex. There was one transaction I flexed 3 times. It was like trying to catch a falling knife. I had no idea where I could place this, at what price, and structure as well. You're learning about not only market flex, but you're learning about index flex. Mm-hmm. That was sort of a new concept. You're learning about OID, original issuer discounting, which is, again, a form of pricing and fee flex. So these are things you never had to call upon before. You're learning about the difference between a material adverse change and a material adverse effect. You're learning about how the language around marketable securities, which is really taking your funded bridge loan, which is never supposed to be funded, and converting it into a high yield bond, and distributing that. So it was, you learned a lot on those troubled deals.
Yeah.
Those are the ones I definitely remember.
Yeah. Yeah. I think when it's not going smoothly, that's something that's
right.
Memorable.
That's right.
And just from like the banker's perspective, like having the value of a syndicated leverage finance desk, like what is that value does that bring to the bank for a client's perspective? Like, why is it so integral to a deal process, and like, that takes them to the finish line of them winning the mandate because they're able to say like, hey, we have this money ready for you.
Right. It's it's capacity. So it's leveraging the amount of senior debt you can put in, say, an acquisition financing. So, the first topic the CFO and the CEO want to discuss is how much senior leverage can we put into this structure? And then you sort of plug the gaps from there, be it bonds or equity in some cases. So how deep is the market? Can we place, X billion amongst the banks? Could be difficult, in which case you might want to think about a strategic partner like private equity or someone like a Fairfax doing a convertible debenture. Or it's, we definitely think there's capacity in the market. So we think we can place that paper and get you the amount of debt, senior debt capital that you require. The flip side is what syndications does for the bank itself. Mm-hmm. And it's all about sort of velocity of capital. So when I think about my time at RBC, capital started off being very cheap, balance sheet capital. It quickly became more and more expensive, especially after the financial crisis and the Basel regulations. So if you're able to offload that credit risk, you're therefore freeing up capital so you can redeploy that capital either into more loans or redeploy elsewhere. So you're getting a lot more velocity on your balance sheet.
Cool. And you build up this great career at RBC. You're seeing a lot of transactions. It's one of the most active dealers even to date in the Canadian market amongst that 80% market share you mentioned.
Yeah.
And then comes 2015, you join MUFG. How did that opportunity come about? What was the decision-making process like there?
Sure. So it came about via an executive recruiter, and it was Bank of Tokyo Mitsubishi at the time. I received, I think, the teaser for the mandate, and it was 6 pages long. I'd never seen anything like that. And it was clear that this bank was trying to change or needed to change. Sorry.
Mm-hmm.
The parent, it was a Sched 2, so you're restricted by capital. The parent had injected a lot of money into the Canadian operations around the time of the financial crisis, and to their credit, Bank of Tokyo, along with the other Japanese banks, really stepped up through the financial crisis in Canada and deployed a lot of balance sheet out to our borrowers at the time, and frankly saved a lot of the syndicates. They injected a lot of liquidity into the bank market. So the parent is obviously looking for a return on that capital. So they really needed to transform their operations. I knew what was going on with Tokyo Mitsubishi south of the border. I could see the changes that they were going through, and thought it was very, very interesting, and believed that the operations here also needed to do the same. I knew their portfolio inside and out. I'd probably put them into about 90% of their portfolio. So I knew there wasn't going to be any skeletons in the closet that would sort of undo me. And, I had a fantastic time at RBC, 15 years in that stretch. It was technically the third time I was back at RBC.
Yeah.
I like to joke that the HR department obviously wasn't very well coordinated at the time. So I had a great run, great career, loved the people, starting to feel a little rote, the role itself. Senior leadership at a foreign bank in Canada seldom come up.
For sure.
And I was at an age in my late 40s where I could take a flyer, though I didn't really feel like I was taking a flyer per se, but it was a good time to sort of take on that risk of a new role.
Yeah. And now it's day one. You're head of Canadian corporate banking at a new bank. You're the new face. Yeah. What is your approach thinking? You mentioned this kind of turnaround story. How are you developing talent, building out coverage groups, maybe reviewing the loan book? What does that look like?
Yeah. It was the proverbial drinking from a fire hose. It's a massive and complex bank, but I like to joke that my role really was an HR role, and it was leveling up on the talent and putting the right bums in the chair, not trying to be all things to all people. So hiring guys and gals who really understood the business verticals that they operated in, would have the ear of the customer, and were frankly quite competitive.
Mm-hmm.
You definitely need that drive at a foreign bank to be successful. So it was leveling up on the talent, and this talent also needed to understand how to leverage a network. So a lot of the hiring was from other global banks.
Yeah.
Other large global institutions where they understood the value of leveraging the network and bringing that network to customers, because that's really our differentiating factor in this market. You cannot try and become a Canadian bank. You can't compete head to head with a Canadian bank. You need to pick your spots and milk it
For sure.
per se.
Yeah. And I guess that part too, did you find when you first joined from a global perspective in your global product partners, was the Canadian operations disjointed or
It
was
was
that used
very, yeah, it was
effectively?
very disjointed. So one of the things that hadn't worked and that we changed day one was moving away from a geographic focus to a business vertical. I mean, this is not scientific by any stretch, and it sounds like the obvious thing to do. So we were completely dysfunctional operating geographically to the point where we would have a GM in Montreal and a GM in Vancouver, longtime bankers who never talked to one another.
Yeah.
And coming from RBC, I would call up the Montreal guy and say, "Hey, are you guys looking at these types of transactions?" "No, we don't do that." Call up Vancouver the same day.
Yeah.
"No, we do that." I'm like, "You guys are the same bank. Like, what are you doing?"
Yeah.
Kind of thing. Even the behind the scenes, the processes were disjointed geographically. So we consolidated the whole portfolio management and credit write-up functions centrally, leveled up talent, as I said, moved to business verticals, and freed up growth. Another way that happened was converting from a Sched 2 to a Sched 3. So you sort of get the capital constraints off, and now you have, in theory, the entire balance sheet of the parent to deploy. So you're really freed up from what you can do in that perspective.
And 2018 comes along. You're appointed the first local president and principal officer of the Canadian branch. How did that change your responsibilities, your scope of work, your autonomy, and where the business is going from the Canadian standpoint?
Yeah, it's a great question. So not only now am I responsible for the banking business, but now I'm ultimately responsible for the Canadian branch as a Sched 3 foreign bank branch. The proverbial buck stops with me. So it's the business, and now it's the governance of Canada branch, or as we like to say, the safety and soundness of Canada branch. I chair an executive committee, which is akin to a board of directors. On my executive committee are local Canadian executives, and as that, we form branch management. And so myself as principal officer and branch management are ultimately responsible to OSFI from a regulatory perspective. So it's that other side of the equation, as I like to call it, in terms of decision making and strategy for the branch. Not just the corporate banking business. That scope is broad and was daunting, I think, initially, but I think I've got a pretty good handle on it. Now. That was sort of the largest change.
Yeah. And I think this is an awesome chance to speak about the culture of a Japanese bank. Obviously, very unique for most experiences of those on the street. So I'd love to hear about that and, kind of your connectivity internationally.
Yeah. So the business in Canada is sort of divided into sort of two worlds, if you will. There's a Japanese corporate bank, and you can think of that as subsidiary banking. And then there's a global corporate banking business. And it's about 80-20 split between global and Japanese. On the global basis, we're sort of a matrix organization. So we report into the Americas. So we report into New York. And then ultimately that reports into Tokyo under the global banking business. It's still very much a Japanese bank. So culturally, it's one around, you'll hear words like consensus building, etc. It's a very thoughtful culture as well, very respectful culture. You don't see a lot of infighting that you would see at some, I'm not disparaging any American banks or Canadian banks, but you don't see a lot of that tension. Doesn't mean it's not there under the surface, but in terms of open conflict or competing against other groups, that was something that I had seen at other institutions. It's very methodical. And that can cut sort of both ways. Coming from a Western sort of mindset, we want immediate satisfaction. We want to do the deal, or we want to do this transformational change, and we want to do it now, kind of thing.
Yeah.
And the Japanese way is more consensual, as I said, and it's a little more methodical and planned out. So an example I like to use is when we launched the securities business. They're like, great idea. You can go hire one person. So we were lucky enough to convince Steve Uske to join us from Credit Suisse. And it's like every year you go back and test the thesis. So you go back after year one and we say, well, with our one person, we were able to do this and do that. It's unfolding the way we think it should unfold. And they would go, great, hire two more.
Mm-hmm.
Okay. And you would slowly build it up. And it was the right decision to invest and start up that securities business, but it took a while sort of to get there. Conversely, the stereotype of say the Western way to do it would be great idea. Here's $50 million. Go get some, class one real estate, hire a bunch of people and let's have a conversation in a year. And if you go back in a year and it's not going so well, then you're having a very different conversation. It's fire everyone, we're pulling out kind of thing. That's very, again, it's a generalization, but we've seen it happen.
Yeah.
We've seen banks in this market come in and come out. The Japanese have a very long-term view. They commit for the long term.
Yeah. And, MUFG, massive global presence.
Yep.
Like most people don't know, they strategically own a portion of Morgan Stanley.
Yep.
You have this global scale. You're serving these Canadian multinationals. How do you use this ecosystem to differentiate yourself? Like, is there a transaction that comes to mind that, shows MUFG's capabilities to its fullest?
They don't like to talk about specific transactions, but it's really about leveraging the network. And as I said a little earlier, like bringing the network to the customer. So you're right. We're a huge global bank. We're in 52 countries.
Yeah.
Chances are we've done a financing in a jurisdiction somewhere that is going to be very interesting to our customers here. It could be an aircraft finance structure. It could be a securitization of healthcare receivables. It could be a project financing in data centers. I mean, that's sort of an obvious one.
Yeah.
Where we're a leader in globally in sort of data centers. So it's leveraging that network, bringing those subject matter experts to our customers. That's really how we differentiate ourselves.
Yeah. And looking ahead, obviously, like you kind of spoke on it, MUFG, number one, I think for almost the last 20 years in project financings in the Americas. What's next in terms of growth? What keeps you up at night? What are you excited about? Maybe globally and then also like within Canada branch.
Globally, I would say it's going to be all about certainly in the short term sort of project and potentially infrastructure finance. If you look at Canada, we have that major projects office. I forget the exact nomenclature, but it's clear that there's going to be a lot of capital entering the system. Data centers, clearly, it's and the hyperscalers. There's definitely a bull market going on there. You can argue the pros and cons of that. Closer to home, where I see growth, for Canada, I see it in the areas of working capital solutions, which is a pretty broad area, but that would include things like trade receivables finance, supply chain finance. When you think about what's going on in the background with the trade issues, the disruption to supply chains, kind of a lackluster economy right now. Margins are very important to our customers, and with that cash flow. So it's maintaining the focus on working capital. I think we can do some great inroads there. Our products have vastly improved over the years. And then it's also We've been migrating down the credit spectrum. We've always considered ourselves a debt and bank shop. So it's in the mid-market space where we see growth. It's certainly not as competitive as, say, large cap I grade, not as overbanked, though still very competitive. I think there was recent announcements by Citibank and JP Morgan, I think, about the Canadian mid-market space. We see a lot of growth potential there, working with Canadian sponsors as well. We're making inroads there. Again, we can leverage the network. We can do it domestically, or we can leverage the network for, say, some of these private equity sponsors into the U.S. market. We have a full leverage finance platform. We're almost cracking top 10 from a league table perspective. So we're earning our lead lefts south of the border. That is rapid growth for the bank overall in the Americas. We have subject matter expertise in the area of what some banks call innovation finance or near venture lending. That also fits within the mid-market space. So we have a team of bankers, I think 30, that joined us from Silicon Valley a couple of years ago. This is what they do, and we're making inroads there. So we really see that mid-market, broadly defined space opening up for us.
Yeah. And taking a step back, reflecting on your career, with the relationship management perspective, you're balancing managing that downside risk. We have clients that are coming and knocking on your door and asking for some pretty favorable terms. So you have to balance winning those mandates, managing your own downside risk. What does that look like?
Yeah. So the art of relationship management. Yeah, that is a tough question. You could probably do an entire podcast on that, but if I could boil it down to its simplest terms, you really have to understand your client very well. You really have to understand your bank very well. And those two things are going to change over time. Risk appetite levels will change at the bank with your borrower or your client. They're going to have their strategic issues along the way. There's always going to be a curveball, and it's managing that. And it always starts with an open and transparent conversation at all times.
Yeah.
You have to be up to date on what's happening with your client, their industry. They have to be up to date on what's happening with your bank. And that information flow shouldn't be sporadic, at the time of every annual review. It should be on an ongoing basis, because as I said, the landscape is going to shift on you. And you have to be willing to have those hard conversations. And I think it's through those hard conversations that the strongest relationships are born, at least, from what I've seen. And always have a solution. You should always be thinking about your customer and coming up with a solution, and especially during the hard conversations, because everyone's looking for a way out of the room.
Yeah.
It's awkward and it's tense, but if you can if you have solutions, let's look at structuring it this way, or let's look at a strategic investor, or if you can have those solutions ready, you're going to be better off for it from a relationship perspective. And then lastly, and I'm sure you've heard this from others, is clients become your friends.
Yeah.
And the strongest relationships, again, that I've seen are where, the client and the bank are friends. There still needs to be objectivity. They are still a client, and you can't blur that line. But that's where, through that friendship, through knowing their business up and down, that's where you have a strategic dialogue with your customer, and that, bar none, raises you above the more transactional relationships that your competitors probably have for the most part.
Yeah. And you're at this very unique spot where you have to balance, wanting to win these mandates with telling the client what they want to hear, but you also want to give them the right advice to build that strategic long-term advisory relationship. And kind of moving away from that point, you talked about developing junior talent.
Yeah.
You've obviously had a great career at RBC. You've had a great career at MUFG. What do you think makes you successful? What do you look for in young talent that comes through these doors? And what do you see in like others that makes them successful in this business?
Well, I'll start by answering what I think are the sort of the key ingredients to longevity and whatever your chosen field is. And first and foremost, I think it's understand what you are looking for and the why.
Yeah.
And if you can solve for that, like I am interested in this business because, I think it will lead to this, or, from a development perspective or personal perspective, I sort of am really jazzed by, say, relationship management. And I love seeing the impact of what I do with my customers. If you're answering, I hear it's great money, or you're influenced by a movie like Wall Street or something like that, then that's, you're just chasing something shiny, and it's probably not going to resonate with you at the end of the day. The second thing I would say is be patient. Take the long view, and the grass is not always greener on the other side of the street. It's the same challenges at every bank that you're going to run into.
Yeah.
So make sure you exhaust all the opportunities that are with your current employer before you make that switch, if that's what you need to do. Then the third thing I would say is build your network, internal and external, because as you progress, it's that network that's going to help you. Certainly as you move up, being on an MD promotion panel, I can't tell you the number of times where it's come up where it's like, who knows this person? Like, can anyone tell me what he or she does? I don't know this person, kind of thing. That's fatal. So build your network, because these people, as they progress with you, you're going to need their help sometime. And conversely, they're going to need your help. So I think an internal network absolutely is very important, plus your external network. Now, when it comes to what I look for in sort of young talent is drive. As I said, it's being at a foreign bank. It's different, and there has to be sort of a more competitive drive. That's sort of an easy one to solve from the quality of talent that I've seen, junior talent that I've seen come through the door. Everyone seems to have drive, so I don't really worry about that one too much. It's having an open mind and always asking questions. Your role as a junior is to absorb as much as possible.
For sure.
You're here to learn. We get horsepower out of you in terms of production, but you're here to learn the business, be it banking or be it investment banking. Ask those questions. There's no such thing as a dumb question, that age-old statement. So that shows to us that this person's intrigued. They're curious. Curious is a skill that's required. You need to be curious, and that will take you. That skill will take you far. So those are the things I would say I look for in sort of junior talent. I'm not so interested in GPA and hard metrics like that. And we like to see different things on the resumes. Unfortunately, all the resumes are stacked. Everyone is a superstar. It's like the resume writing skills that you guys have. It's off the charts. I wouldn't even qualify for my current role if I was to draft my resume. So we look for different things, be it captain of a sports team, or something just different that's unique to that individual, and it shows a level of uniqueness and hopefully a different perspective.
Yeah, beautifully said. I think one more question before we wrap it up.
Sure.
if you could talk to young Craig Gardner, fresh out of Huron University, battling through that role in compliance and, ultimately getting to where you want to be,
Yeah.
Being an MD at one of the largest investment banking platforms in Canada. What advice are you going to tell young Mr. Gardner?
I would say apply to Ivy or Queens. Again, not to favor any one school over the other, but I think at the time I was taking my honors history, I was having a great time in university. Loved the subject. Still consider myself, a student of history. And what's the meme out there? It's pretty much every day I think about the Roman Empire.
Yeah.
On some sort of level. I knew I wanted to do my MBA in time. So arguably I wasted a lot of time. So, doing a 4-year degree when I was more interested in business. So a 4-year degree in history when I was more interested in business. As you rightly pointed out, floundering, quite frankly, career-wise, when I first joined Dominion Securities, those are sort of years wasted in a way. When I joined SocGen, I was, as an associate, I was on the older side, for an associate because of those, taking those laterals and going back to school, which ultimately was very, very helpful. So I would say to young Craig, just buckle down and go to business school.
Awesome. Thank you so much.
Thank you.
Thank you for joining us, Craig.
Thanks.